Welcome back to Financial Market Insights for Traders, the podcast where we break down the complexities of global finance to help you navigate the markets with confidence. I'm your host, Sophia, and today we're exploring a topic that's been making waves in the financial world: the potential shift in global currency dominance and what it means for traders like you. For decades, the US dollar has been the bedrock of international finance. It's the currency of choice for global trade, the primary reserve held by central banks, and a symbol of economic stability. But as we venture further into 2025, several developments suggest that the dollar's unchallenged reign may be facing new tests. The US dollar's historical dominance. To understand the present, let's briefly revisit the past. The dollar's dominance was cemented post-World War II with the Bretton Woods Agreement, establishing it as the world's primary reserve currency, initially backed by gold. Even after the U.S. departed from the gold standard in 1971, the dollar maintained its supremacy, facilitating international trade and investment. Today, it accounts for over 60% of global foreign exchange reserves. Emerging challenges to the dollar's supremacy. However, recent economic and geopolitical shifts are prompting questions about the dollar's future dominance. Rising U.S. debt and fiscal policies. One significant concern is the escalating U.S. national debt, which has surpassed $34 trillion as of 2025. This mounting debt has sparked debates about fiscal sustainability and its potential impact on the dollar's value. Additionally, recent policy decisions, such as increased tariffs and trade tensions under the current administration, have contributed to market uncertainties, influencing global perceptions of the dollar's stability. Efforts toward de-dollarization. In response to these concerns, several countries are actively seeking alternatives to reduce their reliance on the US dollar, a process often referred to as de-dollarization. The rise of the Chinese yuan. China has been at the forefront of promoting its currency, the yuan, on the global stage. Through initiatives like the Belt and Road Initiative and establishing the yuan-denominated oil futures market, China aims to increase the yuan's international usage. The inclusion of the yuan in the International Monetary Fund's special drawing rights basket underscores its growing significance. The euro's position. The euro remains a strong contender, serving as the second largest reserve currency globally. The European Central Bank's efforts to strengthen the euro's international role, coupled with Europe's economic influence, position it as a viable alternative to the dollar. Cryptocurrencies enter the arena. The advent of cryptocurrencies, particularly Bitcoin, introduces a new dimension to the currency landscape. Recently, President Trump announced plans to position the United States as a leader in the cryptocurrency space, aiming to transform the country into the undisputed Bitcoin superpower and crypto capital of the world. This move includes introducing clear regulations for stablecoins and market structures to stimulate investment and innovation in the crypto sector. The administration envisions economic growth and a strengthened U.S. dollar through dollar-backed stablecoins, alongside the establishment of strategic assets like a Bitcoin reserve to preserve and maximize the government's cryptocurrency holdings. Geopolitical dynamics and economic sanctions. The use of the dollar as a tool for economic sanctions has also influenced global attitudes. Countries like Russia and Iran, facing U.S. sanctions, have accelerated efforts to conduct trade in alternative currencies or commodities like gold, aiming to insulate their economies from dollar-centric financial systems. Implications for global trade and finance. The potential shift away from dollar dominance carries significant implications for international trade, finance, and investment strategies. Diversification of foreign reserves. Central banks worldwide are diversifying their foreign reserves, incorporating currencies such as the Japanese yen, British pound, Australian dollar, Canadian dollar, and Swiss franc. This trend reflects a strategic move to mitigate risks associated with heavy reliance on the dollar. Impact on U.S. economic influence. A decline in the dollar's dominance could affect the United States' ability to influence global economic policies and implement effective sanctions. The reduced demand for dollars might lead to higher borrowing costs and impact domestic economic conditions. Market volatility and investment strategies. For investors and traders, these developments introduce both challenges and opportunities. Currency market volatility may increase as alternative currencies gain prominence. Staying informed about geopolitical events and monetary policies becomes crucial in navigating these fluctuations. The path forward, a multipolar currency system. While the dollar's immediate displacement as the world's primary reserve currency is unlikely, the trajectory points toward a more multipolar currency system. Such a system would involve multiple currencies sharing the stage, reflecting a diversified global economy. Conclusion: as we witness these shifts in the global financial landscape, it's essential for traders and investors to adapt their strategies accordingly. Diversifying portfolios, staying abreast of geopolitical developments, and understanding the evolving roles of various currencies will be key to thriving in this dynamic environment. For those looking to navigate these changes effectively, consider exploring platforms like crystalballmarkets.com. They offer advanced trading tools and insights to help you stay ahead in the evolving Forex market. Visit their website to learn more and enhance your trading strategies. That wraps up today's episode of Financial Market Insights for Traders. If you found this discussion valuable, don't forget to subscribe and share it with fellow traders. Stay informed, stay adaptable, and as always, trade smart.